Hi, and welcome to Sunday Night Charts. We take a look at charts to help you with a trading week ahead. I'm your host, Steven Van Metre, and keep in mind, U.S. markets are closed for Memorial Day weekend, and we'll be open on Tuesday. Moving averages, colors on your screen, 50 days green, 100 days blue, and 200 days tan. Price versus momentum. Price is general direction. Prices are ahead. Momentum is a rate of change, a bullish indicator for both as positive and a bearish indicator for both as negative. Momentum often, but not always, leads price. Technical analysis attempts to determine where buyers and sellers are at. Resistance levels buyers can't break, and support is level sellers can't break, or resistance is where sellers are at, and support is where buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of trade, help with time of trade, and provide the direction and the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. And we got some interesting things in charts today, but oh boy, so you've seen some potential bottoms. And that's what you want to look for, not something that's at the top. You want to look at where it is at the bottom and go up. S&P 500, symbol SPY. We're bullish now, of course, across on price. Annual momentum is unchanged from last week, with just price going completely bullish. Now we're all on the momentum indicators. Remember, the bottom ones are the most powerful ones. These are your leading indicators for change. Now back all green. Let's go and look at a chart and see if we need to make some tweaks here. And it looks like we do. Now we have these are what are called supply zones in between these purple lines. And what is a supply zone? It is where buyers or sellers are at. So we know around, say, 390 in this zone here, there are buyers of SPY. And up here, we're seeing some buyers chase the 50-day moving average higher, but we need to move this line up because, well, the volume is telling us that this overhead resistance is now moved up a little bit. Sellers are clearly a little bit higher than they were before, so we need to move our line accordingly. And that's where you see this band of volume telling you this is a supply zone. In fact, we arguably could even consider moving this line up a little bit to catch this bottom. It may not be the best place for it, but we'll move it up a little bit and see if that holds its pattern. But supply zones are where you're going to find your volume. These are where the volumes are at. Right now, we are in what so far has been a sell zone with the sellers keeping control of prices here. So buyers need to drive this higher. 50-day moving average is helping out. So momentum is clearly moving higher here as is price. But the key with momentum is it's the rate of change. The speed of this price move is slowing. Hasn't been a problem in this rally so far, but at the moment, momentum is slowing, price is bullish. Let's go on to the Qs. We've got Nasdaq 100, annual momentum still bearish. And now remember last week, we saw the 1 and 3 month momentum. I think 1 month was red, 3 month was a negative and rising, which is gold. And now look what's changed. These are kind of leading indicators. The 1 month I almost put no stake on. I mean, it can move around, no big deal. When you start seeing the 3, particularly the 6 months really, and now you got a problem. But last week we mentioned, look, the 3 month has changed, worth taking a look at. No major change other than on the ultra short term flipping to bullish, and that in itself isn't a big deal. Let's go look at the Qs and see if we need to make any adjustments here. And the answer is we really don't. Well, we can add, maybe we should add a line here and say, look, we know that the sellers are right in this range in here. We can see the sellers are here. We know the buyers are up here. So the only question, and maybe this line needs to be a little bit higher. There is an art to this. I'm not the best at technical analysis of drawing lines. I like to look at where buyers and sellers are at. So someone else might look and say, that's not where it exactly needs to be. I'm not looking for exact. I'm looking for close enough. So what we're seeing now is buyers pushing into what has been a previously established sell zone, perhaps a left shoulder head right shoulder in the initial formations of the right shoulder, maybe not. You can definitely see momentum here is not real strong on this price move because it's starting to go sideways. When you start to see price go sideways, you get an indication there's a potential top. Now that happened back here in August and September, but it broke out. So it doesn't mean this can't go higher. It just means like, look, you should start, putting some caution into the wind, and you've got a heavy zone of support down here, which is good where buyers are at. The only question is, are buyers fatigued? Can they drive this thing to new all-time highs, or are the sellers just taking easy pickings here? But there you go. On to the small caps. Remember, the small caps lead the large caps. So one thing you want to watch is the Russell 2000. Annual momentum unchanged, price virtually unchanged. 1 and 3 month momentum went from red to yellow or gold, meaning they are now negative and rising instead of negative and falling. That generally is a positive indicator. Let's see what's going on with IWM here, and what very clearly looks as a topping pattern. You can see now the 50-day moving average is flattening. There's this heavy volume level, which has been, sellers have been clearly above it. Bulls have driven price back over it. But as of right now, you've got to look at this chart and say, look, this is bearish until otherwise spoken. I mean, anytime you get a longer sideways pattern, that generally means sellers are exiting these positions and they're cashing in. So I will say this is bearish at the moment, but it's still, we'll just say it's a consolidation pattern until proven otherwise. But given where this volume is at, and given how price has not moved up here, it tells you the bulls have a lot of work cut out, because the sellers are sitting right at about, 226 to 227, or all the way up into 234. So keep an eye on the Russell, because the Russell breaks, the rest of the market goes with it. Energy sector, annual momentum only change on the short term, no big deal. Everything well in the intermediate term on prices up. Everyone's super bullish on crude oil, along with energy stocks. Let's first look at crude. We can see now the trend is back rising, running into sellers here in the 66 to say $68 range. Who could those sellers be? Likely producers. I mean, who has oil to sell? Producers. So their momentum is still up. I mean, look at the price. You can visually see momentum and price moving higher, but the rate of that change is starting to slow a little bit. And that's kind of what we see here in annual momentum. It's telling us, look, we know price is going higher, but the rate of that price increase is not going up that fast. That's what this tells us. In XLE, we see the same thing in crude. Now let's go look at XLE, and what do we see? A similar pattern here. 50 days is starting to flatten out. Price is struggling to make new highs. Again, telling you the same story, that while price is up, the rate of that increase is slowing, and that is where you tend to get trend changes. Now, you might say, well, we got a similar pattern here and it kept going. Absolutely could do that. There's no question it can. So what we're looking for is, are these sellers in XLE here at 52 and crude at 66 to 68? Got a lot of inventory to sell. That's the question. Is the economy going to roll over and slow down? Will demand go away? So far, you have to say this is still a bearish or bullish trend until otherwise spoken, but annual momentum is telling you keep an eye on that. Same with financials. Price bullish, annual momentum unchanged. And it's crazy to me that everyone thinks that banks are going to be making massive profits on their loan book when they're only making profits on trading. So here you see climbing this 50-day moving average, way off of it, way off the other moving averages. You can tell there been sellers up here. So let's move this line up here and say there is your overhead resistance somewhere right at the all-time highs of XLF. That is wild. All right, let's go on to utilities. Virtually, I think unchanged here in the on utilities. Maybe the 3 months switched back to green. I don't remember, even though I just changed these. Anyways, let's go look at the utilities chart. And this thing has been range bound as well, with sellers being up here in this, $65 to $68 range. Technicians are going to say this is a bull flag. Could be. The only question is, can the bulls take this up? If not, the good thing for the bulls, and it's never bad to have things come down and reconfirm support. The good thing for the bulls is support is now moving up. You can see this big red bar of volume moving higher. So support is now around 63. And if this came down and tagged 63, that you could still overall have a bullish trend for utilities. But at the moment, range bound sellers seem to be in control. Let's go on to industrials. No real change here, and of course, as we've been looking, everything's just correlated with these broad equity indices, and yeah, this is just climbing higher. No sign of any real major slowdown in industrials, so nothing to worry about there. When you see the small caps start to go down, then you'll see change there. Nothing changing here in gold miners either. Price is bullish. Remember, at one point this thing was all red, and now you can see the power of momentum. Remember, this was down here was was solidly red. If I recall, maybe there was one or two of the gold ones, and look, it turned and said you can buy that. I still think from my personal macro thesis, this is not the big bull breakout, but from price and momentum, you saw that it is. So 1, 3, 6, and 12 month, all green and rising. No changes price and annual momentum. No change in the 9-month momentum, negative and rising. Let's look at GDX and see what's going on there. And here's the move that it picked up. You've got the 50-day crossing the 100. It got over its 200-day moving average. Now the level of support has been raised up into this $35 to $36 price range. So for me, when I look at this chart, I see this as a bigger structure. The question has this been invalidated from going back to May of last year? Is this move here where we clearly saw sellers, is this over? We do know this move right up, this recent move has due to CTAs either short covering or adding to their longs. So these are just mindless computer programs. Is this the real move? Well, so far it looks like a real move, but there's a lot of but again, here's where I run into the issue of macro thesis saying this is going to go the other direction versus price and momentum going higher. How do you reconcile that? I'll leave that up to you. Emerging markets, though, and gold mining stocks in particular do have a relationship. So you're not going to see one completely diverging from the other in terms of EEM. Only price change, 1 and 3 month momentum are negative and rising. Let's go look at EEM, because if you're going to see gold miners rising and emerging markets fall, one is going to turn around and catch up with the other. And here you see emerging markets in a topping pattern. So you have, again, this really weird view of gold miners are telling you, yeah, things are good. Liquidity is coming in the system. Emerging markets saying no, 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 no. And that is a challenge because these two generally kind of follow each other. And you can see heavy resistance up here at the $54 price range where sellers have been. So when you look at this chart and you see where resistance is at, where all this volume is at, it's very clear where sellers are sitting, suggesting that emerging markets is more likely to head lower than higher. Whereas when we just looked at the gold mining chart, is suggesting more likely to go higher than lower. But again, these two do not diverge for very long. On to the bond market, high yield bonds. Why do we look at high yield bonds? Because they tend to lead equities as well. When companies can't pay on their junk debt, or start having struggle with that, it tells you what's likely to happen for the broad equity market. 1 month momentum is negative and falling. That generally is not a big deal. Small change in the ultra short term on price, not a big deal. But we've been looking at this long topping pattern in high yield bonds. And guess what? It's unchanged. You can still see sellers very clearly above this $87 price range. Anytime it gets below, buyers come in, but they come and run into a wall. So high yield bonds are also telling you that, hey, perhaps there is a peak in equities coming because high yield bonds are going to lead equity prices lower. So keep an eye out on that. And hey, how about the Bond Kings framework? Long-term treasuries, TLT. Now remember, this thing was plastered red, and then weeks and weeks ago, and then remember the red started bouncing between gold and red here on the bottom. I said these bottoming signals are the strongest of them all, and when they start moving up and they start bouncing around, it's telling you bottoms form. Now look at this. This week, all gold, all negative and rising, and look at price and annual momentum. Almost all completely changed, ultra short term through intermediate term. Now, if you missed the signal on gold, no big deal. There is a relationship between bonds and golds. We've looked at this on the macro show. So here it's telling you very clearly, there's a bottom going on in bonds. Now, whether you believe it or not, that's a different story. That's always where emotion gets into things. But what do we see in bonds? You see this heavy level of what is at the moment overhead resistance at 139.73 on TLT. This is what I believe is where buyers have done most of their purchasing. A break above that is super bullish, completes a bottoming pattern. I'm looking at next couple weeks of seeing this indicator or this trend change break through. So what you're looking at from price and momentum and the deeper momentum signals is, yeah, there's a bottom going on here. Question is, what will happen next? Next, we should see the 1 and the 3 month turn green. Those will be the next signals we will look for on this chart. The long term, unlikely to change, but we'll want to see the 1 and 3 month go green. How about gold futures? You have price, annual momentum, nothing changed on gold futures at all. Let's take a look at gold. and it seems to be running into some headwinds around, it got around 1900 here. It's got some vol. So this is interesting. It either has volume support at 1876 or sellers are sitting above this. It's too soon to know because, again, we know the CTAs have been short covering and adding to their longs here. So that is the question. Are these sellers in here? Or, did sellers push the CTAs into short covering and buying so they could sell more? Or is this really a bona fide rally now? I can't make a call on this. I'll let you make the call. You let me know what you think. How about silver? Nothing changed on silver. Silver's been massively range bound, despite attempts by Wall Street bets to take this thing to the moon. And we're seeing here this support or resistance. We know this is a sell zone, right? This $27, $28 price range. We know this is where sellers are at, and we know buyers are in this $24 to $25 price range. So is this bar up here where we see this heavy zone of trades? Is this telling us that sellers are dominating up here still, or is now support moved up? It's too early to call, but you have to take this in the bigger picture. Your assumption has to be at the moment that this is where sellers are at, which tells you in my book, I wouldn't be taking a position on this chart. You look at this and say, no conviction here at all. None. Now, how about the dollar? Now, last week, the dollar was all gold here. We know the dollar came down. Anything that can drive the dollar lower, everyone is super bearish on the dollar price, bearish across the board. And what do we have here? Anti-momentum, bullish across the board. So interesting that can momentum now lead price and pull these signals back up? Let's take a look at the dollar. And because, I am bullish on the dollar according to my thesis. And look at that. We have a bottom at 80 in the low 89s, another bottom holding at the low 89s. Clearly, sellers are sitting here around 90, 40, 90, 50. We see that. So this move here is what triggered those momentum signals on the bottom to turn back red. Now the question is, over the next week or two, do we see this pull up and this be a major bottom here? It's hard to argue that this isn't a big double bottom sitting here, the moving averages aren't giving you anything. The 100-day is flattening out. That's positive. The 200-day is slowing down. The 50-day is trending down. But the key here is price is telling you there's potential double bottom. The only other question will be will these signals on the bottom now start to reverse over this next week or two? And of course, we'll be watching for that because, again, my personal view is dollar is going to go a lot higher than most people realize. Anyways, thanks for watching. We'll see you probably on Monday for the macro show. Bye now. The content of this video provides educational information only. It's not intended to provide investment advice. It is not to be construed as a recognition or solicitation by a security, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre, personal capacity. Opinions expressed in this video that do not reflect the view of Atlas Financial Advising or Steven Van Metre Financial.